Hey, what is happening, Bulls and Bears? It is Friday. We're back with another dose of thank you. Let's get into it. Wow, a lot of news as usual. Every day it seems like there's so much news coming out that just underpins the fact that this economic collapse is happening. It's real. We're in the middle of it. It's not next week, next month, next year. It's here right now. We've got a ton of more evidence to go over today. First, please make sure you like and subscribe to the video. I'd like to keep this channel operational and to keep the news coming here. And I really appreciate all your support here. Let's go ahead and get started. Lead story here. This is widely reported out of the Post. Everywhere you look, it's in there. Financial news. Walmart laying off hundreds. An ominous sign for the economy. That's the actual headline here. And this is out of their e-commerce center. So basically people buying things online. So what do they see? Do they see tightening credit standards with the banking crisis that's happening right now? It's very likely. It's unusual that a discount retailer like Walmart would be laying off at a time like this when people are looking for lower prices. They're looking for bargains. Walmart is laying off hundreds of workers based out of their e-commerce fulfillment center in a development that could signal more trouble for the struggling U.S. economy. Roughly 200 workers based at a facility in New Jersey received pink slips, Walmart's spokesperson told Reuters on Thursday. So another sign. Why would this be happening if everything was just fine, no problems? Another big announcement, layoffs. Accenture to cut 19,000 jobs. That's a big cut. That's a tech consulting company. That's about 2.5% of its entire workforce. It's lowered its annual revenue and profit forecast. So just another company tied to the tech industry. Ouch. That's a big one. Also, Janet Yellen came out and said she's not considering blanket insurance for all bank deposits. And we played the clip and we gave you some quotes here over the past week or so where she was saying words like, we could decide to come in and cover these depositors at smaller and regional banks. Maybe could if they meet the criteria. What else did she say? If they're systemically important or if their failure would risk contagion to other financial institutions. So this did not instill confidence in people, and that's why we still see these bank runs continuing. And we reported in our last report, it was over $1 trillion now withdrawn from small and regional banks. And we'll see here in a few days if it's going to slow down, but it looks to be not slowing down. It looks to be even maybe accelerating some. Of course, the big surge came after the announcement of the bank failures, but then it actually creeped up again here in the past few days as far as withdrawals from these banks. Bill Ackman's out there. Bill Ackman, the investor, he's one of the people that advocated for blanket coverage for all depositors, saying that's the only thing that will stop the contagion. He's out here saying, quote, the economy's headed for a train wreck after the last rate hike. The U.S. economy may be headed for a train wreck as the inflation fight continues, and Yellen ruled out blanket coverage to protect depositors. So will he be right? Will the contagion continue? And is the economy, if it's not already, is it going to be a train wreck? That's Bill Ackman. Barron's, banks are borrowing at financial crisis levels. What does it mean? We've got this new Fed lending facility. It's really not new what the Fed's doing, but this type of lending where banks have this instant access to liquidity. Banks continue borrowing at historic levels. Everything's fine, though. The banks, there's not going to be any contagion. The banks are solid. Remember the stress test. The stress test said the banks were fine. Just like Jim Cramer a couple weeks before the collapse of Silicon Valley Bank said the bank was a buy. Buy. Pretty amazing how wrong these people are getting it, all the time. Also, another report, credit card transactions have tumbled since the banking crisis, since the announcement of the bank failures. Citigroup writes in his latest Citi's Credit Card Insights report, the bank's credit card data for the 16 subsectors it tracks show a total spending in the third week of March decreased 10.3%, a big deceleration versus March week 2. That's down 6.8%, driven by a high single-digit decline in transactions, except for food spending, tumbling by 13%. The Jews notes, quote, "This was the first week of data following the disruption within the financial sector, and we were curious if it might have an impact on the consumer. It sure did." As Citi goes on to note, the third week of March, the first week after America's regional banks imploded, was the biggest decline in total retail spending we've seen since the pandemic began April 2020. Why would people be pulling back on credit card spending? Could it be that the banks are failing and they're really not doing anything to prevent more banks from failing? There's no blanket rescue for the small and regional banks, according to Janet Yellen. Is that going to instill confidence in people, or are people going to continue to pull their money out of the bank? Remember, these are people with more than $250,000. Even if you have less than $250,000, I wouldn't really trust it. These banks are leveraged to infinity. We don't know the exact leverage out there, but the bank reserve requirement is 0, so we know that it's way past that. It could be 1,000% for all we know by now. Now, one of the biggest questions that I still get is, why are so many places hiring? Why are so many places hiring? Well, that's because the service sector is very low paying, and a lot of people, they know they can't make it with a service sector job. Not all of them, but a lot of them, fast food, servers, etc. But I witnessed a lot of people at a job fair. Let me go ahead and put that up right here. This is Balboa Park. This is a job fair here in San Diego, and the lines were enormous. Sure, there's tons of jobs, but are they good jobs? Are they jobs that pay enough, considering the cost of living right now? Well, I don't think so. So why would there be this many people at a job fair, at a job recruiting event? Also, we talked about in our last report, maybe 2 reports ago, Indeed.com, the website Indeed.com that posts jobs. They are also laying off, 200 staffers. No, 2,200, 15% of all of its employees. 15%, 2,200. Nothing wrong here, nothing to see. The house is burning down, nothing to see. We're just going to sit at the table, eat our oatmeal, and pretend that nothing's wrong with our blinders on. A lot of people are doing that. But we're going to be prepared, folks. So keep stacking. The meltdown is happening, and we'll probably see it accelerate. And pretty soon, everybody's going to realize how leveraged, how insolvent this house of cards, this financial scheme has been and is. And it looks like a crash is becoming more and more likely, unless they really change their tune on keeping all these smaller and regional banks propped up. When the bank failures continue, that's when you're really going to see a tightening of lending, and it's going to be really hard to qualify for a loan. We reported here recently that automobile car loans, the denials are at 6-year highs. So we are likely going to see that continue. And when people can't get loans, when people can't borrow money, we all know what happens. Prices drop. So then maybe we'll see some deflation. But other things are going to still see inflation, like energy and food. We're very unlikely to see deflation in those areas. All right, so it's going to be interesting. Of course, it's going to be wild. It's going to be wacky, and I'll be here to cover it for you. So, what do you think about the Wal-Mart layoffs? Accenture, 19,000 layoffs tied to the tech industry. Looks like contagion to me. Please let me know what you think down in comments, and we'll be back very soon with more financial economic news. Keep stacking.